Hey guys, in the next few weeks here, I'm going to be sharing my free video workshop about the most important things you can do right now to start laying the foundation for your future success. We just finished recording and I am psyched to share this with you. Just a quick teaser, the first video is going to cover how to create a personal vision statement for your life. This workshop really is covering some of the most powerful stuff that I've learned over the last few years, so I think you guys are really going to love it. To get access to the workshop once it's live, just head over to millennialmm.com/join and subscribe. I'll see you guys over there.
Failure sucks. And the question is, what do you do when it happens to you? And the answer is, don't fold your tent and go home. Figure out what the lessons were. Figure out what you learned. Figure out what you can take to the next enterprise. Stand yourself up, straighten your back, dust yourself off, and do the next one. And there's no shame in it. It's totally cliche. But the only things we regret are the things that we don't try. So just go do it.
Hello, folks. Welcome to the Millennial Mastermind. Today, we are joined by EricStaz. Eric is the founder and CEO of AltoIRA and a serial entrepreneur who's seen his fair share of wins as well as some losses. His mission is to deliver 21st century investment opportunities to everyone, even non-accredited investors. Eric is a former investment banker and early stage investor with a passion for nurturing startups and raising capital. He even teaches an entrepreneurship class to high school students in his hometown of Nashville, which is pretty freaking cool if I must say so myself. But Eric, welcome to the Mastermind, my friend.
Well, Brad, great to be here. And I agree with you entirely on how freaking cool Nashville is, for sure. And anybody who's listening, there's an open invitation to visit.
Beautiful. Well, I'm going to be there in a couple months, so I'm going to be knocking at your door when I'm there, Eric.
Perfect.
So just to kick things off, I would love to understand where your entrepreneurial roots stem from. What led you down this path of the crazy entrepreneur world?
Yeah, I was just kind of born with the disease. I don't, if I have to look into, where did this itch come from? I'd probably say from my mom, who throughout my life would always come up with creative and efficient ways to solve for things that otherwise would either cost too much money or take too much time. And one just example of that actually, I'll give you two examples. The first was my sister and I, we grew up skiing, and my sister never liked to wear her gloves. So she would constantly take them off and lose them almost on a daily basis. So my mom came up with the idea of taking essentially a long piece of elastic, stringing it through her ski jacket, and attaching either end to either glove. So my sister was then free to take her gloves off, and they would just be swinging next to her poles all day. And but she never lost another pair of gloves. And then another example is my mom was a dietitian, and it was very hard and she was a dietitian that worked in a lot of elderly homes. And oftentimes it was hard for nurses to understand what patients were allowed to eat or not allowed to eat. So she essentially created a paint by numbers picture book for nurses as a nutritional guide for their patients. And that's just a couple of the things that my mom would come up with. So if I had to answer the question, where does it come from? It comes from my mom somehow. But again, I think it's just something that you see a problem and you can't help yourself. You kind of want to solve it.
So what was the first of those problems that you recognized and really decided to go after as a business?
Yeah, so I was probably I actually was in high school, and the problem was I needed money to buy stuff that I wanted. And so I started off selling frozen lemonade out of an unair-conditioned van in Miami, Florida. And it was a really simple business to understand. You know, the more I sold, the more I made. And so it was a practice of trial and error of trying to figure out what the best route was in order to maximize sales and minimize the time in that hot van. So that was the first one. The second one was when I went to college. Sort of same idea in terms of having a route or a distribution business. I acquired the rights to distribute the Boston Globe and the New York Times on campus, and sold those papers to my fellow classmates. And you know, so that was probably business number one and business number two of any sort of significance.
That's great. And then you went on to co-found other companies like Curenex, Plum Good Food, and Tennessee Community Ventures. And your focus right now is AltoIRA. Can you share a little bit about what the inspiration was for Alto and how that business idea came about?
Yeah. And again, it's like, wow, I had a problem. I didn't find an adequate marketplace solution. And so then I went about trying to figure, is this a market opportunity large enough to fix? And so if we roll back the clock about 4 years, I was working in a venture capital firm that I co-founded, and I was making an investment in one of our portfolio companies, and I wanted to also invest personally in that company. And just as luck would have it, at about the exact same time, I was looking at my IRA statement and wondering why I wasn't using this cash that I couldn't touch until I retire for long-term investments, illiquid assets that, you know, they're going to remain that way most likely for 7 to 10 years on average, which means, you know, you're not going to trade in and out of these things. You can't. It's not up to you. So it seemed to me, and by the way, most alternative assets offer the opportunity for higher reward. And so,
just for my benefit and anybody else who might be listening who's not super clear on it, what do you mean by alternative assets?
Great question. So alternative assets, the first big definition is, okay, non-publicly traded securities. So non-publicly traded stocks, bonds, mutual funds, index funds, ETFs, et cetera, meaning these are things that you're not going to put an order in on Fidelity, Schwab, Betterment, Wealthfront, Robinhood to buy security X, because these things aren't traded on NASDAQ or New York Stock Exchange or anywhere else. And so that's sort of the going around the barn backwards way of defining it. To define it more directly, it's early stage equity opportunities, also known as venture capital. Could be mezzanine or later stage, more commonly known as private equity. Maybe real estate. They could be debt obligations of any sort of flavor. Could even be crypto assets for those who are thinking about dipping their toe in crypto. So those are the what I would say traditional alternative assets. Those are those classes. And so,
awesome. Thank you.
No worries. Great question. So as I was looking to make an investment in this portfolio company that the venture capital firm was involved in, and I wanted to use my retirement savings, it turned out it wasn't that easy to do. And because I was kind of determined to do it, I went and figured out just how to make it happen. The problem was that it took about 6 to 8 weeks to make it happen. It was expensive. And even for someone who actually has made a lot of alternative asset investments previously, the custodial industry just made it overly complicated and complex. And so, after my first experience, I didn't know whether I had just chosen the wrong custodian or whether, there was something else going on. Maybe I really didn't know what I was doing. So I went and I made 2 more alternative asset investments using my retirement savings, using 2 different custodians. And I had the exact same experience. At which point I went about figuring out whether or not I was the only one with this problem or whether there were a lot more people like me. And it turns out with $30 trillion sitting in retirement savings accounts and give or take 1% invested in alternative assets, there are a lot more people like me. And so the theory was that if we could rip the people, the paper, and the time burden out of the existing process, we could essentially turn complexity into simplicity, I like to say, and do for alternative IRA investing what TurboTax did for self-filing. So no longer did you feel like you'd have to hire someone to do your taxes and pay too much. Similarly, now you could execute an alternative IRA transaction on your own using our platform. You could do it quickly. You can do it easily because we explain each step along the way. And because we've ripped the people and paper out of the process and replaced it with technology that scales, we also do it cost effectively. And so that's our real mission at Alto. So when we started the company, I would say, look, I saw a big market opportunity and I felt like we could provide a technology solution that could be a real utility to a lot of people. And that's still true. But what's more important, and especially I think for this audience, that is, I'm going to, just by the title of the show and based on the discussion you and I had earlier, this is a millennial audience. And, 83% of millennials think they'll never have enough cash to retire. And while I understand that feeling, and I agree that you're not going to be able to if what you're relying on from an investment standpoint is ETFs, mutual funds, and index funds, the point is it doesn't have to be the case. You can get access to alternative asset investments, and we want to provide that access. So if you ask me what the real mission of the business is today, it's to make sure that everyone who wants a choice about retirement in the future actually has a choice. And that's what drives everybody at AltoIRA.
So who do you think that alternative asset investing is right for? Especially thinking through things like venture capital and private equity. Some of these are very scary to somebody who doesn't know much about the space and hasn't explored that avenue of investing before. So who do you think that it's the right fit for, and who should be exploring this avenue for investment?
Well, I think it's the right fit for everyone, but I'm going to play devil's advocate for a second with you, Brad.
Please.
Well, why is investing on in a public company stock any less scary than investing in venture capital?
I think that traditionally it's just because it's easier access and more people are familiar with the process of how that's done. Personally, I would say it's not much scary in terms of the control you have over the process or over what happens with your money, but I don't have as much experience within some of the alternative asset stuff as I would with some of the more traditional public company trading that happens.
Okay, so that's fair. So what I would say is, if you're using your Robinhood app, right, or Betterment or Wealthfront, let's not discriminate between all the millennial trading platforms that are out there. It's really easy to get on your phone and buy a stock, right?
Yeah.
I agree that is way easier than what happens on the alternative asset side. I think traditionally, though, what the conventional wisdom has been that unless you're an accredited investor, which is someone who has $1 million of liquid net worth or has made $200,000 a year for the past 2 years and expects to make the same for this next coming year, or if you're married together with your significant other, you've made $300,000 a year for the last 2 years and expect to make $300,000 in the next. That only the people with money are the ones who should be investing in these alternative assets. And to that, I call bullshit. And I say that because if you look at the wealth in this country, right? I don't actually know what the exact statistic is, but most of those wealthy didn't make it on their own. They inherited it. So how is it that they're any smarter than the rest of us to be able to invest in alternative assets and have the opportunity to receive outsized returns? And then if you look at the remainder of the people who have become wealthy, they didn't do it investing in ETFs, mutual funds, and index funds. They did it through a lot of hard work and or through having access to an alternative asset of one sort or another. And so in that regard, what I say is if you're willing to put in the time to diligence the opportunity, there's no reason any of us shouldn't have the ability to decide whether or not we want to make an alternative asset investment. It's your retirement money. I don't think anyone cares more about it than you do in terms of whether or not you think an investment is a good investment, a bad investment, or a neutral investment. If you do the homework, you ought to be allowed to make it.
Mm-hmm. And so for somebody who is interested in getting started in that, how would you recommend that they start educating themselves to and putting in that front end work to be able to make educated investments and decisions?
Yeah, so that's also a great question. So one of the things that you can do, and by the way, in addition to your podcast, I mean, there are an endless number of podcasts about venture capital and private equity investing, right? So you can begin to educate yourself by listening to others who have done this. I mean, we all already know that there are 1,000,001 podcasts about real estate investing. They also exist in the venture capital and private equity world. So that's as good a place as any to start. The other thing is to visit some of the investment platforms that have been created in the last 3 to 5 years, like AngelList, like WeFunder, like Ground Floor, like Republic, like Silicon Prairie, and go there and begin to read about some of the companies that are raising money and some of the real estate opportunities that you have to invest in. And so you just begin to both educate yourself and get familiar with the space. And the more you dig in, the more sort of leads you will find as to other places where you can go and read about this asset class or asset classes. And so it's really like anything else that we're interested in and curious about and want to learn more about. Go to Google, do a search, and start, and just kind of follow your nose that way.
Yeah, I think that's great advice. And another area I'd like to pick your brain about, because you have this great insight into the investing world and also experience on the entrepreneurial side of things. How should aspiring entrepreneurs be thinking about investing, especially say there's someone who's sitting in a current job, they have their retirement fund, whether that's 401k or IRA, and that's how they're investing at this point, what they know, what they're comfortable with, but they also have a good idea that they may need to have some capital available for starting a business in the coming years. What advice might you have for somebody sitting in that seat?
Yeah, so the hardest thing to do is to start. That's I think that's the single largest obstacle for a new entrepreneur is, how do you take that first step? How do you start? And you're going to reach a point where you just can't help yourself anymore, and you decide that you got to do it. And people do it in different ways, by the way. Some people start their business while they're still employed by somebody else until they feel like they get to a place where the business is growing in a way that they can't simply support it unless they're doing it full time. There are other people who say, I got to do this. I can never do it unless I'm doing it full time. And they go ahead and cut the cord and leave the security of another employer and just go for it. And, that's something that each individual entrepreneur has to determine for his or herself. It's not there's no formula where you say, X plus Y equals Z, and when you get Z, that's time to do it. It's really personal. And so I don't know how to say that any other way.
Yeah, that makes a lot of sense. But do you think that from the investment side of things, they can start looking at, or should be looking at, some of these alternative assets as a viable opportunity in those early days of entrepreneurship? Or is that something that typically happens later down the road once you've achieved some success? What I'm trying to really understand is if somebody, typically with a lot of times when somebody's starting a company, they're not cash rich in those early years. So what focus should be on investing versus investing back into their business or themselves?
I see what you're saying. Well, again, this depends significantly on each individual's own balance sheet, but the way most businesses get started and grow is by betting 100% on yourself and your business, which means you're not really investing in other people's startup businesses or even later stage private equity businesses. You're just taking everything that you have available to yourself and you're reinvesting in yourself and your own business. And that's just traditionally the way it works, right? Especially if you're on the younger millennial side, right? You won't have a huge amount of savings, and what you have, you're going to use to feed yourself and pay for electricity while you try to get your business off the ground. And that's just reality for most people.
Yeah, that definitely makes a lot of sense. I also want to pivot here a little bit. And in the intro, I mentioned that you've seen both wins and losses in your entrepreneurial journey. And whenever I'm talking to a successful individual like yourself, I love to hear about those challenges that you've bumped up against, overcome, or have forced you to go a different direction. So I was wondering if you would mind sharing a story of one of those quote unquote losses and what that experience, what you may have learned from that.
Yeah. And I'll start by saying you learn way more from your failures than you do from your successes. First of all, on the success side, I think in every success story, there are one or more places where you have to get lucky, so to speak. and something just sort of, the ball bounces your way, something breaks your way, that it doesn't show up in a business plan or on a whiteboard anywhere. It just sort of happens. It happens though because of a lot of hard work, and also because you have your eyes open and you're paying attention to the fact that something may kind of break your way, and if it does, you're paying attention. You can take advantage of it. But that said, there's way more to be learned in the failures than the successes. And when I moved to Nashville, I guess in August of 2003, I moved here from San Francisco, and my wife and I decided to start an online organic home grocery delivery business called Plum Good Food, which we started in the second half of 2004, and built it up until about $5 million of top line revenue by the end of 2008. When I think everybody, most people anyway, have read about the fact that 2008, the economy fell out of bed. It was a disaster. And as a result, the online grocery shopper really went away, and we watched sales decline month over month at a rate of about 30 to 40%, which is just a huge number in terms of customer loss. And it really had nothing to do with us. It had a lot, had everything to do with the economy, and where at one point, money or wages for expenditure on a luxury of having someone deliver your groceries at the time went from being available to kind of non-existent. And whereas people had no time because they were working so much, so many people got laid off that all of a sudden they had more than enough time to go to the grocery store. And so there was a dynamic there that pretty much crushed our business almost overnight. But regardless of that fact, there were operational decisions that we had made leading up to that point that just could not be rolled back when things went against us. And those are some hard lessons to learn, but they're also good lessons to learn. And really, the thing is, you could look at this business, Plum Good Food, that at one point had been voted the best thing to happen in Nashville, and then a couple of years later, it's gone. And we would still hear from customers every month about how great Plum Good was, which is nice to hear. But at the end of the day, we failed in the department of actually creating a sustainable enterprise. And, failure sucks. And the question is, what do you do when it happens to you? And the answer is, don't fold your tent and go home. Figure out what the lessons were, figure out what you learned, figure out what you can take to the next enterprise, stand yourself up, straighten your back, dust yourself off, and do the next one. There's no shame in it. It's totally cliche, but the only things we regret are the things that we don't try. So just go do it.
Yeah, I appreciate you sharing that story. And I also love to ask guests on the show, if you could hop in a time machine and go back and speak to the younger version of yourself, maybe even that college version of Eric who is selling newspapers, selling the Boston Globe and New York Times on campus, or selling lemonade out of that hot van, is there one piece of advice that, with everything that you've learned and that now, that you would give to yourself back then?
Wow, I have so many crazy things running through my mind, none of which are appropriate to say on a podcast.
Everything's appropriate here.
Even an explicit podcast. But God, there's one thing. That, Brad, that I got to tell you, that is a great freaking question. I'm going to say be kind. Be kind to yourself. Be kind to those around you. Be kind to the ones you love. Be kind to your family. I mean, it goes by quickly. I'm about to turn 50 years old. You know, a son who's finishing up his sophomore year in college and a daughter who's starting her freshman year next year. I mean, it just flies by. And I think kindness is underrated. And I think we could all use a lot more of it. So that's my that's my gift.
I love that. That is a beautiful piece of advice that I think that if everybody could really take that to heart, we'd be living in a very happy place. And not that we aren't already, but it's definitely good advice. Eric, for anybody who wants to learn more about you, more about AltoIRA and any of the things that you're working on, is there anywhere you'd point them on the web or any resources that you'd point them to?
Sure. I mean, it's altoira.com, ALTOIRA.com. I'm EricStaz, EricSatz at altoira.com. I love hearing from people. Don't be shy. And, you know, the team here is kind and friendly. And if you want to reach out and if you're not sure how to get started, we're happy to help. Very
cool. Well, we very much appreciate that. And I just want to say that I appreciate you coming on today, sharing some of your journey, what you've learned throughout your entrepreneurial life cycle, and the stories that you were able to share with us today, and the investing advice as well. So, Eric, thank you very, very, very much for being here.
It was my great pleasure, Brad. Thanks for having me on, and thanks for what you're doing for the millennial generation. I just think it's awesome.